Hang Seng is doing really well. That one is up 2.2% right now. Hero MotoCorp's total sales growth came in at about 7% year on year, largely in line with what the street was estimating.
The Nifty on the downside should not breach 18,420 levels.
18,557 is what we're seeing on the Nifty.
Almost there is no area where we are able to see in India which is at the bottom of the cycle.
So we do believe that in the next 4 to 5 years, our retail volume should double.
We continue to be market leaders.
Now, basically, the news is that Coherus Biosciences, which is a pharmaceutical company, has launched Humira in the US markets.
And there is some green on the screen, though the Nifty has slipped about 35 points.
Newsbreak has been confirmed that Bank of Maharashtra has launched a QIP.
But as we all know, I think the Indian banking space is an intensely competitive space.
Last 1 month, if you notice, HUL has outperformed ITC.
Well, in a major development for Indigo and travelers from India, the airline has announced expansion to 6 new international destinations.
We did see that from the opening highs, we saw that sharp dip, but there has been a strong recovery from the lows.
Well, that was the day so far. You're with us here on Closing Bell, the last edition of Closing Bell this week. I'm Prashant. With me, my colleagues Reema and Surabhi here in the studios, and I think Mangalam is joining us from the newsroom floor. Mangalam, hi, good afternoon.
Good afternoon.
It's been a story of 3 separate acts for the market, and I think we're in Act 3 so far. So let me just quickly tell you what are these 3 acts. They're nothing but big market moves that we've seen in 3 separate phases. First was, actually the market made the day's high at 922 this morning. 922 to exactly 1020, we saw a 100-point sell-off. It's very visible. The picture tells you the story. We saw a 100-point sell-off from 1020 till 150. We had a slow grinding move, but which was higher. And we recouped pretty much all of the losses that we saw. We kind of hit not quite the exact peak of the day at in the morning at 920, 922, but we got to round about there. And starting 150, we're in the third act. And, I don't know where we will be by the end of it, but we've seen a sharp sell-off once again, which amounts to, at last count, about 55, 60 odd points or so from 150. So 3 separate kind of moves. All in all, net after all of that from yesterday's close, the Nifty's got about 30 points to show for it. There has been selling pressure which is emerging at higher levels. This week, and I think that makes the point about the vibrancy of the broader market. By the way, mid-caps and small-caps are higher, but nothing compared to the last 2 days. Small-cap index was up 2% last 2 days. It's up a little bit. That's about it. But for the week, that is Friday till now, the small-cap index is up 3%, the mid-cap index is up 1.5%, and the Nifty is barely up. And I think that is the story which we will focus on via individual stocks over the next 60 minutes. Reema.
Hi, I'm just focusing on the third act, right? The fall that we've seen in the last few minutes. Look at the Nifty Bank. The high on the Nifty Bank was a level of 44,088, which means from the day's high, we've slipped close to about 200 points, and that fall has come through just as we speak. It appeared that we will, settle down a bit. But again, in the last few seconds, there has been a further leg down in the market. So the Nifty Bank has slipped more than 200 points from the day's high. It's your usual suspect. HDFC Limited has dipped into the red, so that's down close to about 0.25%. HDFC Bank is about to dip into the red. It's absolutely flat. In the morning, it was in the green, but now it's completely flattened out. You've got some pressure coming through on ICICI Bank, and Reliance Industries has been under pressure through this week. Pull up, the 1 week chart of Reliance Industries. Today, it's just down about, 0.3%. But this week, Reliance Industries has given up close to about 2%. So there has been that continuous slide that we've seen in Reliance Industries. So stock underperformer there.
Yes, absolutely. I guess this is how today is different from the rest of the 4 days of this week, right? Because we've seen heightened volatility today. These pretty sharp swings. Otherwise, the market was ambling along, in a tighter range. But today has been a day of marked volatility. Having said that, one thing remains constant. The action is in the mid-caps. If you're looking at the advance decline ratio, for instance, look at it. You've got almost, 1,900 advancing stocks, just about 1,000 declining stocks. So the index volatility aside, there's plenty of movement in individual names. And I'll just pick out some names for example. Mankind Pharma didn't react after what was a pretty good set of numbers for the fourth quarter that day, but the reaction's happening today, 5.5% on the upside. Nykaa is zooming away. There's about a 6-7% up move now, almost 7% on Nykaa, up and about. Rima has, of course, been talking to us about Cyient and how it's been a stunner move, 80% in this year. Today itself, that move is about 6-7%. So a lot of interesting mid-cap plays. By the way, the Graphite twins, HEG and Graphite India, both of those stocks are really, really active. Again, big volumes as well on them. So these are moves that are happening on price as well as volume. And there's a fair amount of momentum out there. But Mangalam, who's to say, looking at the volatility, not quite sure what kind of a close we're in for. Another 60 minutes to go.
My bet would be that, 18,500 is the fulcrum around which we will move on the frontline index, while, there is a big move across the board where we see in the cash stocks, so to say. You spoke about a fair list of the stocks that are moving. Just take a look at a few more. Nureka, for instance, it was locked in upper circuit of 20% yesterday as well. And these are stocks which not a lot is spoken about in general, but these are ones which have moved like 35-40% this week itself. Nureka up around 15% now as we speak. Best Agro Life, decent commentary coming in from the management in the conference call. That stock up around 10% as well. Copran is another stock which is up 20%. Not, again, stocks that we speak about very often, but the kind of moves and the kind of volumes that we're seeing on these stocks makes one make a mention of these. Paras Defense up another 8% today. You've been looking at Titagarh Wagons. The railway pack has begun to accelerate once again. So Titagarh Wagons is up around 9%. And then you spoke about Nykaa. In fact, this morning, the stock of the morning was Zomato with a big move. Nykaa is the other one. So is it time for all the new age companies to once again catch up? Earlier, it was growth at the cost of profitability. Now they're looking at profitability, perhaps at the cost of growth as well. And with a 50-60% decline from their highs for all these new age companies, is the street looking at these companies once again or not? We had put out this piece, same time last week on the editors roundtable. So let's see how this trend pans out. But as far as the frontline index is concerned, 18,500, that's the fulcrum. In fact, for all those options that expire on next Thursday, 18,500 call and 18,500 put have been extremely active, the most active strike actually, and both of them put together have a premium of 200 odd rupees. So even if you're playing for a broad range, you're not looking at the Nifty go beyond the walls of 18,300 at the lower level and 18,700 at the higher level. So it's a 400-point broad band. But again, the way the street is moving, it doesn't look like it's going to bash into the walls too much over the next 4 days.
All right. Mangalam, so we'll keep an eye out on those numbers. Nike, I was looking at, and I was making this point earlier, based on what we've seen in fourth quarter earnings, we've seen changes to full year estimates. 3 new age companies have seen earnings estimates being revised up. Nykaa is not one of them. I just checked. PB Fintech is right at their top of the list. Its full year earnings estimates have moved up 82%. Numbers, of course, are very small, so there is a big drastic revision which has happened. This is for full year numbers. This is change in earnings expectations over 3 months. Zomato has seen a 32% move higher in earnings expectations for the full year. 190, Paytm has seen a 30% move higher in its earnings expectation. Nykaa has seen a 15% downgrade to earnings expectations, a full year. But this is just one thing, right? I mean, one aspect, their earnings, nevertheless. But for many of them, even now, even as they are now talking more about bottom line and not revenues and GMVs, etc., solid, on track, sustainable profitability perhaps is still out, and there are other factors at play as well. Nykaa is doing very well, as Mangalam has been pointing out.
Someone like S. Narain, right? Yeah. He is a famed value investor, and he also came on the channel today and he said that they've started adding these new age companies, though he's not looking at it.
That's an important point. I find it very interesting because last time also Narain was on, he said that what I've done is I've asked my younger colleagues who are more growth oriented, who don't mind perhaps paying, I'm translating 30, 40, 50 times earnings, and they are doing this. And it's a very interesting approach because they say, right, I mean, if you're battle scarred over the last 30 years and Narain is a veteran, you can't do it. You just can't make it. But he did
invest in these new age companies at the time of listing.
Now
during the valuation,
now he's so I'm saying maybe it's whetting his appetite, to at least consider and study.
And ultimately, it has to pass through him, right? Maybe someone else scouts for it and does the due diligence. But I'm sure he has some word, and he's a value investor, and he's been buying into it.
It has to, absolutely. Well, how should you position yourself in the last hour of trade? Mitesh Thakkar is with us with exactly that. Mitesh, hi, good afternoon. Good to have you with us here. Index first, a quick view, and is there a trade?
Good afternoon, Prashant. Not yet. I think, we've been maintaining that the markets will be ranged. And if you look at the range for the day we're now nearly in the last 1 hour. Nifty is having an inside day. Yesterday's high was 18,580. Today high was 18,573. Yesterday's low was 18,464. Today's low was 18,478. Same goes to the bank Nifty. The range of today is between yesterday's range. So it is a market which is still settling down, which is still contracting. So not in a hurry to trade the index. But yeah, on stock specific basis where the action is, which is what we've been advocating to explore and go long. I have a buy on DLF with a stop at 481 for targets of 505. And Hero Motors is a buy as well with a stop below 2840 for targets of 3000.
Thank you very much for that. The stock which has made everyone take notice of it has been Cyient. Not just today, over the last couple of days, the stock has seen a 15% rally. This year, it's up more than 80%. It's outperformed its other peers. The comparable peers would be a KPIT Tech. That's up 60% year to date. But, Cyient is up more than about 82%. So what is it that the street is excited about? One, the valuations. The valuations, despite the recent re-rating, is still reasonable at 20 times forward multiple and cheaper than peers. Two, the guidance for next year. FY24 revenue growth is seen up 15 to 20%, margin improvement, and the key reason for that is the aerospace vertical that's seeing a growth revival. It's in a cyclical uptrend, and the management in a way indicated that this could last for 2 to 3 years. So that's another reason. The third reason is there is a new the COO has been elevated to become the new CEO. So there is some excitement. The fourth reason is design-led manufacturing has been demerged, will be demerged, and eventually separately listed. That gives you an added monetization. And fifth, they've announced a dividend of 16 rupees, and the ex-date for that is on the 12th of June. So these are a couple of reasons behind this perhaps the recent surge in Cyient. Maybe there's something else that's brewing, but that's not yet come up on our radar. Let me throw this question to Prakash Diwan. He's been a close watcher of the technology stocks. Prakash, any thoughts on Cyient? I know at first glance it looks like it's up 80% year to date. Has it run up too much? Is it too hot already? But then if you look at the valuations, it's still reasonable at 20 times. It's not just cheaper than the very expensive KPITs and the Tata LXCs, but it's also cheaper than the large average multiple of services companies like the TCSs and the mid-cap IT companies.
Good afternoon, Rima. So I'm not too sure whether you recall, I had put this out as a very, very valuable pick in the mid-cap IT space about 3 months back when we saw, the revival and air traffic come back, and aerospace being an area where they've really got a very stronghold, very major stronghold, and then that's something where they've got pricing power. Now look at where Cyient is. So we'll come to valuations, in a bit. But look at the growth. Through the pandemic, they've been able to manage that run rate of revenue in that 4,500 crores zones. And then this year, the whole year, they've actually done very well by going 30% higher. That's close to about 6,000 crores of revenue. Now, the beauty is that they've managed to, within this revenue build-up, they've managed to get a lot of newer clients and at very decent pricing arrangements. So, that's something which is actually going to help them for the next couple of years. It's not something which is a one-off. I mean, their services are something which you continue to use on a more longer-term basis to derive value. So, the whole design of the business model, their sales proposition is very interesting. And you should see some of their pitch that they make to newer clients. And that will tell you why it's kind of, getting so better and better at margin growth as well. So there is element of growth. There is an element of pricing power coming in that's been restored. And my sense is the peer group, there are lots of players used to be earlier operating out of Europe, which probably don't have the wherewithal to grow or expand the way Cyient has been able to do in terms of offering a bigger range of the value add that they make in the entire chain. So I think business is going to continue growing. The guidance reflects that. On the valuation, I think on a trailing basis it looks very high because the stock's gone up, but the PEG metric is something which you could look at as more favorable. And then at 16,000 crores market cap, you really are not overpaying for a company that's almost getting to be a far bigger global player than what it used to be 4 or 5 years back. So it's certainly got all the vectors working towards it. And as you rightly said, KPIT looked as if, it was going to get impacted. And then the Honda arrangement came, the STM thing came, the mobility thing, which Honda has started. And that could kind of continue getting them into a very different pocket of excellence of sorts. So, these are companies that are driving their growth on the basis of, superior delivery. And it's not just a PE re-rating that's happening. So it's a catch-up, and that's why that 80% looks very stark. But my sense is even from here, you will get a CAGR of 30% growth from the business. And so at some point, the valuations will start looking attractive if you pencil in 24, 25 kind of earnings into the price.
Okay, so good to buy even now, Prakash?
Yes, so what happens is the market itself has gone up linearly in the last couple of months. So everything will tend to be a bit expensive at some point. And maybe, keep these names on your radar and keep on adding to the portfolio as and when there's a dip. But definitely bad days, weekdays is when you add to the portfolio.
Okay, so we know this is a name that's on Prakash's radar in terms of a long-term buy. With that, let's shift the focus to M&M Financial. That is a stock in focus because of the business update that's come in for the month of May. We've got Abhishek joining in. Abhishek, what are the numbers saying?
Well, the disbursements look good for the month of May, similar to what disbursements that you saw in the month of February. So for May, the disbursements are at 4,150 crore. This compares to about 4,185 crore that they did in February, which was a good month for them. So total disbursements for the month of May is up 39.6% YOY and close to 10% on a month-on-month basis. That is compared to April. April plus May, if you take these 2 months together, the disbursements are at 7,925 crore, which is up 39.5% on a YOY basis. That is similar disbursements comparison for April and May together of 2022. And if you compare Jan plus Feb, the disbursements are down 3.2% in April plus May number when compared to Jan plus Feb number of 2023. Collection efficiency improves to 96%, which compares to 95% in the same month last year and about 92% that you had in April 2023. They say that the stage 2 and stage 3 without RBI qualification, the gross NPA ratio and net NPA ratio remains stable. So asset quality largely stable, and business assets has grown by 1.9% month on month and about 3.9% when compared to the numbers that were there for March 2023. Back to you.
All right, Abhishek, thanks a lot for that. That's about M&M Financials. But just keep an eye out on the market. From the time we started the show, there's been a bit of an uptick. The Nifty bank is up about 100 points. The Nifty, which was absolutely flat, is up about 33 odd points. The sector which is moving fast right now as we move towards the close of this week is the metals pack. So just pull up the intraday chart of Hindalco. That stock's suddenly moved up around 3.5 odd % at the high point of trade. We've seen a big spike in names like JSW Steel as well as Tata Steel as well. Both these counters again at the high point of trade. Prakash, before we talk about M&M Financial, just a word on these metal stocks, because if the belief is that, going forward, the global scenario will only get better with regards to the central banks not increasing the interest rates or perhaps going on a bit of a pause, then do you think one should look at metal stocks once again, which had seen a big decline because of increase in interest rates globally?
So, Mangam, selectively, certainly you should. And I mean, talking about Tata Steel being, a special situation, if you will, given the fact that even if there is a slowdown, or there has been a slowdown in steel demand and some sort of a easing of prices, Tata Steel, the scale that it operates on globally, and then particularly, the presence that it has in Europe, which has always been a big burden, is actually going to turn in its favor, given the fact that they will be able, when Europe starts rebuilding, and at some point in time, the Ukraine-Russia war is kind of, losing its relevance and significance and intensity as well. And that's nice, good news for, the world at large. But eventually there will be a lot of rebuild, there'll be a lot of reconstruction. And when that revival happens, steel is something which will be required. Now, China itself hasn't been able to augment its capacity in a way that it can kind of disrupt pricing. and the kind of logistics also don't work that much in favor. But Tata Steel has that advantage. And now you have a very different animal compared to 4 years, 5 years back when the balance sheet was so burdened with debt. I mean, it's completely deleveraged. It's lean. It's got, if you look at sum of parts in terms of whatever it's acquired and is looking at acquiring, it's a formidable combination. I think the market will recognize that once things look up, as a sector. But you buy at the bottom of the cycle, not the six. This is an intermittent pause, if not the bottom in the cycle. But that's where, my sense is you'll probably see Tata Steel come back in its own. It's in a great shape to revive itself. I don't know when it happens, whether it's June or July or quarter later, but it's a great pick from the large cap commodity plays at this point in time.
Prakash, to stay on, need to get into a break. We'll come back and discuss the way forward. Rajesh Kothari of Alpha Accurate Advisors joins in next as well.
My journey of insurance and investments began at the same time when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, har pal aapke saath.
How do you start an iconic movement? Mannerism would say it's all about refinement and richness of invention. Classicism would say it's all about form and craftsmanship. Impressionism might answer, it's all about capturing the magic of every single moment. While Surrealism would find all of this quite, well, surprising. After all, it's about creating the icon of a new movement. Welcome to Forwardism. The new BMW i7 and the new BMW 7.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
डायबिटीज है। जब लाइफ में डायबिटीज का डर आता है तो इंसान हर एक कदम सोच समझ के उठाता है। सुबह अलार्म को जगाता है, जितने हैं आसन सब आजमाता है। आपको बुरा ना लगे इसीलिए पूरा परिवार आपका डाइट प्लान अपनाता है। ना नहीं, बिल्कुल नहीं। अपने फेवरेट मीठे को मना करना नो थैंक्स अचीवमेंट बन जाता है। डायबिटीज कंट्रोल करने के लिए आपने इतने स्टेप्स उठाए तो हमने भी आपके लिए एक कदम बढ़ाया। बजाज अलियांज लाइफ इंश्योरेंस प्रेजेंट्स इंडियाज ओनली टर्म प्लान एक्सक्लूसिवली डिजाइन फॉर डायबिटिक्स। ये प्लान आपके फैमिली लाइफ गोल्स को सुरक्षित रखता है, साथ ही हेल्दी लाइफस्टाइल अपनाने पर रिन्यूअल प्रीमियम पर रिडक्शन भी देता है। समझो हो गया।
Welcome back. Well, if there's one sector that's really been in top gear, so to speak, today, it's really been the auto space, particularly two-wheelers. Eicher is the only exception, actually. The numbers are very good, but the stock cooled off in all the market volatility. M&M has been holding pretty strong. May was a strong month for the company in terms of the sales that it managed to do. Total sales for May for M&M are up 14% year-on-year. The company witnessed strong growth in domestic passenger vehicles. Demand for SUVs remained pretty robust. We did catch up with Vijay Ram Nakra, President Automotive Division at M&M, to get a sense on how demand is shaping up this year. Take a look.
I think the demand continues to hold strong. Retails have been very much in line with billing, largely on account, as you know, that a lot of the products and brands in our portfolio have a very strong demand, whether we talk about the XUV 700, the Scorpio N, Thar, especially with the recent launch of the rear-wheel drive, XUV 3002. So, given that the demand has been extremely strong across the SUV portfolio, retails for us have been very much in line with it. We've been saying that we have a capacity of about 39,000 for our SUV portfolio. Last month, we ended just shy of 34,000, which included a number of 1,000 numbers for exports. The short-term engine-related supply constraint was largely last month. We are doing everything to bring it under control this month, so don't see that continuing into the future. As far as the full year is concerned, the forecast given out by SIAM and some of the other agencies is that the PV industry will grow in the range of 5 to 7%.
Okay, as that was commentary from Mahindra and Mahindra. Prakash, now most auto stocks, either they're already at 52-week highs or they're some 3-4% away from it. I think M&M is some 4% away. The question is, can you still buy? Do you expect the strong trend that we have seen in the last couple of months, May included, pretty strong? Do you see that continuing?
I mean, I don't see any reason why it would stop. In fact, post-monsoon, things start looking up, and the market is probably going to start taking cognizance of the primary, increment in the sales trajectory and the margin profile that most of these companies are expected to clock. And, it's very well coincided with the fact that the chip shortage is kind of also making it possible to cater to a potentially higher demand. Any company, which has the ability to cater to a slightly premium segment or a quasi-premium segment, which is not your entry levels and the B and C segment as much, is going to do well. And by virtue of that, a lot of SUVs, because the price point, fall into that. So M&M does have that advantage. It will continue to see. But I'm not too sure whether M&M has the wherewithal to face competition from on the electric portfolio. They've really been not able to do much to kind of disrupt the market or to get some sort of a strength that's very long-lasting. Tata Motors is actually putting the heat on them, and then Maruti is taking the sheen away on the SUV side with very clear portfolio augmentation. So M&M might face a little bit of a difficulty, though I love the business, the kind of way it's run all these years. And you know that. I mean, we've seen it double from that level that we started talking about a last couple of years back. But Maruti possibly is the only one that will give you a delta, which is as compared to the other players, where they will be able to give you absolute returns from where they are today, given the improvement that they're looking at in their product portfolio and margin profile. So I think Maruti, yes, that's the answer. If I were to buy a four-wheeler OEM, it has to be Maruti. But not that others won't do well, but they could probably start doing much better than the others.
Prakash, when we chatted with M&M, they also said that the SUV price bracket between 8 to 11 lakhs is also seeing some headwinds in terms of demand, though he's hopeful that once interest rates starts coming down, that demand will revive. But he did speak about some headwinds in that quasi-premium category. But there is another pure premium play in the real estate, and that's DLF. The stock continues to rally. It's a fresh 52-week high. And we chatted with the management earlier today. They said demand continues to remain strong. They've projected a sales of 11 to 12,000 crore rupees in FY24. Listen in to those comments.
We feel pretty confident about the guidance of in the 11 to 12 range, hopefully. And hopefully like this year and the year before this, we should hopefully be able to beat it. But right now, let's stick to that number. Pure numbers basis, I think our total rental numbers this year were just north of 4,000 crores, approximately 4,000 crores. And we anticipate, Sonia, that by March 24, we should exit with a run rate in the range of 4,800 crores plus, So I think from a run rate standpoint, about a 15 to 16% growth in run rate should happen this year.
All right, Prakash, we've been talking about the real estate stocks. Do you want to play it via the stocks itself, the real estate companies, or do you want to play it via building products? How does one, go about this space?
Building products for sure, Mangal. I mean, they are agnostic to which developer does well, which geography does well, which segment does well, right? And from that perspective, you see the tile manufacturer. There's always this very clear visibility of where they're headed in terms of demand and in terms. We know the production numbers, we know the price, the input side very well. the raw material side, and then you know where they could kind of head in terms of eventual revenue growth. And then there are some specialized this thing. I mean, I have been interacting with a company called Storecraft, and the kind of numbers that they share in terms of the market size, not just their business, but the market size of modular kitchen, for example, is staggering. I mean, it's growing, it's an incremental 12,000 crores every year. And then more and more people moving towards more modular kitchen adaptation rather than, the localized version of what we were used to all these years. You'll probably start seeing a difference. So, when those things happen, it's much easier to diversify, to de-risk yourself by playing that. DLF is a great business, no doubt, but I possibly feel at this point there's not much of upside left. I mean, you would have bought it when it was actually available at a throwaway valuation. But now everybody is expecting it to continue this scorching growth, but it might not be so easy for them.
Right. Storecraft this quarter, though, I mean, has kind of been a little underwhelming. But take your point, Prakash. Sorry, you want to say something?
There's a one-off of sorts, but I'm talking about a long-term trajectory in terms of the adaptation and acceptance of these products.
Absolutely. Well, we'll leave it there. Thank you so much for joining us, Prakash. Have a good weekend. We'll see you back next week. Rajesh Kothari is with us now. He's Managing Director at Alpha Accurate Advisors. Rajesh, good to have you with us here on the program. Thank you for your time. I want to start straight with and dive into stocks. Do you still own Muthoot Finance in the portfolio, Rajesh?
Yeah, we do own Muthoot Finance in the portfolio.
Okay. Now, are we, the stock had a long period of underperformance after many, many years of very strong, consistent growth. After the fourth quarter earnings, when we spoke with them, Rajesh, the old confidence was back to be able to do that 15% growth, which they did like clockwork for many years. What are prospects for something like Muthoot Finance looking from here, according to you?
Prashant, basically, we would not actually like to talk stock specifics, but this is a name that we added about a few months back. And I think in finance business, in lending business in particular, what is very important is that how you are develop that business, keeping in mind the underlying risk of your lending. And that's what something is very important. So it is not about the first time that competition is increasing in gold financing. In last 10 years, there were 4 such times when the competition increased significantly. Even cooperative banks started doing the gold lending few years back. But then when it comes to the risk side, it was very high risky business for them. And therefore, ultimately they had to withdraw. So what is important therefore in every phase, whenever it looks so easy that against gold you are lending, so you are 100% safe. But actually business doesn't work like that, correct? And this name, what we are talking about has developed the niche around it. That's the moat. And I think from here on, with more branches, with higher productivity, with a higher ticket size, and of course with pricing also a little bit in the favor, I think this institute is rightly placed to witness the strong growth, both on the loan side as well as on the operating profit side.
Okay, got that. Rajesh, hi, good afternoon. I think one of your portfolios is called Budding Beasts, if I'm not mistaken, which focuses more on growth-oriented stocks. So give us a sense, a flavor of some of your top holdings there. I mean, and in this earnings season, actually quite a few companies have come forward in the mid-cap space with interesting numbers. Anything that caught your eye? Any new ideas you're adding?
Yeah, that's AAA Budding Beast, and that's basically mid and small cap offering, from our table, and probably is one of the, what I would say, product in mid and small cap, where actually we do not own any company which is small by revenue or small by net profit or small by market share. So as our approach is, we always prefer to buy oligopolies, monopolies, but the market cap as per definition of the regulator, it is not in top 100, it starts after 100. And therefore, by default, it is classified as a mid cap and small cap. But companies are not small. So say, for example, in plywood industry, there are only 2 players, but both of them are classified as a mid cap or small cap. Or for that matter, most of our engineering names, what we own, the largest company in, for example, diesel genset is a mid cap. And the largest company in compressor is also a mid cap. And the largest company in, third largest German manufacturing company in pump segment is a small cap. So companies are great. They all are oligopolies. most of them are debt-free, or most of the portfolio companies are debt-free. And importantly, they have a high earnings growth. And as far as, the result season goes, it has been very encouraging result season for us. All our portfolio, whether it is a AAA IOP or AAA Budding Beast or AAA Focus, all three portfolios delivered excellent numbers, significantly doing better than the benchmark index in terms of revenue growth, EBITDA growth, as well as net profit growth. As far as our outlook, and you ask what kind of stocks now, what we are looking into it. I think 3 C's are going to perform well for next 12 to 18 months. So first is capital goods. This is a space on which we have been bullish from last 2 years. And most of our portfolio companies have reported historic high order book, historic high order intake, and of course, seamless execution with the improvement in profitability. And we expect the CapEx theme to continue to do well. The second C stands for consumer. We believe that after the rough patch of last 18 months, where inflation hit the consumer hard, we believe next 18 months are going to be in your favor. Inflation is cooling down. We expect rural demand to revive. We expect auto, FMCG, as well as discretionary, all 3 parts of the consumer segment to do well over next 12 to 18 months. And the third C stands for the credit. We expect the credit growth to remain robust. FY23, the gross system credit growth is 15% plus, which is, I think, historic high in last 13 financial years, and with the lowest possible credit cost. We expect credit growth to remain robust, and therefore banking also will deliver reasonably good numbers compared to the overall market. So these are the 3 C's from theme perspective on which we are bullish as we enter FY24.
Rajesh, those 3 C's are taken. I just want to add another C. What about chemicals, particularly specialty chemicals? I remember last year you were a bit bullish on the specialty chemicals companies, and this happened like 6-9 months back. But this time the numbers from many of the companies have been very average. They've spoken about inventory destocking. They sounded a bit cautious about the outlook from US, particularly Europe. Do you continue to hold specialty chemicals names, or have you brought down your exposure? And what have you made of the numbers and the commentary?
Absolutely right question, Rima. So specialty chemical is one space which we started owning from FY 2017, and we own almost for last 5 years or so. While the structural China plus one theme will continue, we believe that the earnings growth is going to be under pressure due to China opening up, the destocking and restocking related adjustments, and the realization growth may not continue compared to what we have seen in last 3 years. So in fact, last year, most of our chemical companies, except maybe 1 or 2 companies, we have sold most of our exposure in specialty chemical space 6-9 months back. So, and I keep saying that to be successful in investment, you not only need to be buying the best of the quality, but you also need to be agile to make sure that you exit at the peak of the cycle, both earnings as well as the valuations. So now from here on, as I've been saying actually 3 months back as well, that in specialty chemical, now you need to be really bottom up rather than top down, and you need to only have 1 or 2 or 3 companies which you think will do well on a case specific basis. So we own very selected names, about 2 names or so. That's the only thing what we own in specialty chemical, and our exposure we have reduced to probably below 3% in our portfolios.
All right, great logic there with regards to booking the profits. Rajesh, one of the other things that you usually do is not buy immediately, but buy over a staggered period of time, over say 6 months or so, for all the picks that you choose in your portfolio. Just wanted to understand, what is it that you're buying right now? Where is it that you see still more room for up move, and you're still accumulating it, you're somewhere in the middle of buying it over a 6-month period?
Well, little correction, may not be over 6 months, over a period of time, depending upon our valuation comfort. So we staggered over, maybe 30, 60, 90 days, depending upon our comfort on valuation. At times, we are absolutely very fast. If the valuations are comfortable, then we don't wait. And at times, we are really very slow, like during Russia-Ukraine war or during pandemic time, we say it's okay, we'll get our price, at our price we'll buy it, So in terms of the names, while I will not probably able to disclose the names, but in terms of the sectors, these are absolutely the themes what we are focusing on. Last time, in fact, we discussed in detail about the consumption space, where most of the street is right now skeptical because the rural has been impacted significantly, but we believe it is in price. You are buying at the trough kind of thing from the demand perspective. The rural has been hit hard, the inflation has hit hard, and the best of the, I would say the worst of the e-commerce competition also has hit hard on entire consumption space. But as we move the next year, FY24, the gross margins will improve because inflation is now going to be in your favor and not against you. Also, because of the cooling down of inflation, the demand revival has already started. In fact, you have been talking about the auto two-wheeler numbers for the last month. It has been very good show, correct? And that again shows you that rural demand has started recovering. And please remember that Indian consumer is one of the smartest consumer on the earth. And they know exactly when to accelerate and when to decelerate at the right price point, correct? And that's how you need to play. You need to be selective in buying those businesses where there is a pricing power, and at the same time where there is a good blend of rural and urban both, so that you don't take the excess risk on either side of it, correct?
Sure,
so that's that one space, if you ask me incrementally, what we have been bullish on in last 30, 40 days, that's the name what we are adding into the space.
All right, take that point. In fact, Rajesh, you've set us up for what we want to discuss later on the show, which is it time for HUL or not? And we will discuss the consumption space in detail later. Thank you so much for joining in. Let's take a short break. As always, on the other side, we'll get you buy today, sell tomorrow, or reverse trade ideas on the other side with Mitesh. And we'll obviously keep an eye on the market itself. A big move is what we're witnessing.
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from heating and cooling to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
ट्रेडिंग shouldn't feel like this. इसलिए हमने बनाया ICICI Direct Flash Trade, जो देता है clutter free experience, quick entry और exits, live tracking के साथ, सिर्फ ₹7 per order. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
तू है तो मुझे फिर और क्या चाहिए? तू है तो मुझे फिर और क्या चाहिए?
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. There has been that spike in the markets post 3 p.m. Markets have picked up many metal names. So in the frontline pack, Tata Steel, JSW Steel. In the non-Nifty category, you've got a SAIL, Nalco, which have spiked up in trade. Sun Pharma has moved to the high point of the day. AU Small Finance Bank is looking quite smart. ONGC, pull up ONGC, and that's moving up to a gain of close to about 3/4 of a percentage point. The Nifty is now at 18,540, a gain of 50 points. Mitesh is back with us for a few BTST calls, but of course, you can only take that reverse trade next week. Mitesh, what have you made of this last 10-minute up move and your recommendations?
So I think the up move again, it is still within the range, so I'm not very upbeat about it. But I think the market is showing good strength, and I think that is a part of the fact that the breadth is very positive. So I don't think there's a danger of a big decline or a correction happening. So we are trading with more of long buys, but on the stock-specific basis. So I have right now 2 BTST calls. The first one being BTST on Titan, which I would recommend taking home long, long position home with a stop base at about levels of 28.49 for targets of 28.90. And Polycab is the other one, which again, is closing with good strength and has been enjoying an uptrend. So here, take a BTST with the stop below levels of 35.25 for targets of 35.90.
Mitesh, any thoughts on these graphite and HEG kind of names? Graphite is up 12, HEG is up 10%.
Yes, Prashant, I think, the stocks have clearly come on the radar. Good breakout possibilities. I think the long-term indicators have turned very positive. What I'm waiting for on HEG is, if you look at the historical chart, we have some weekly closing around this 1360-65 levels, mainly in the month of April of 22 and then August of 22 again. So I think once this 1360-65 is cleared, the stock should have further upsides to at least 1500 plus levels. Very, very good pattern for HEG. And on the charts of graphite also, I think, some kind of breakout is taking place and the first target is closer to 400. And then eventually I'm looking at a good chance of stock heading towards 430.
Look at something like an Indian Hume. If we can pull that stock up, it's seen a sharp move. I mean, starting exactly 3 o'clock, it's moved up from 153 to 160. It's a vertical rise. Which you'll be able to see. It's a big one, 13% now on the day. Any thoughts on this one, sort of chartically speaking, Mitesh?
I haven't been tracking the stock, sorry, it'll take me some time to study the chart.
Okay, I mean, there's so many names, right, in the broader market, and you started with that, and how that kind of gives the confidence that the overall, it's not, you're not going to see any large shakeout, at least not looking at the way broader markets are doing. Look at KDDL, which is Kamla Dial, by the way, 15% move, 15-16% move on Kamla Dial. Just amazing. Volumes today on Kamla Dial, KDDL, by the way, are some of the largest we've seen in a long time. Actually, yesterday's volumes were very solid, and I think we're pretty much near all-time high volumes on KDDL today. Global Spirits is another one, which is up 10%. JK Lakshmi is up 8%. Minda Corp is up 5.5%. Lumax Technologies is up, 12-13%. IIFL is up 6.5%. Hudco is up 5%. Nureka, of course, has been doing well last 2 days, 10% on Nureka. So this is, a market for all kinds of stocks, and the party is on, without a doubt. Dodla Dairy, 5.5% on that one, 5.45. Walchand Nagar Industries is up 10%. Copran is up 15%. Copran has done, in any case, very well from the lows of March. Basically, it was $100 at the end of March. It's at 178, 180. So just big volume movers that I'm highlighting right now. Well, let's get you some more interesting analysis. Mangalam has walked across to the wall with a detailed comparison between the 2 big FMCG majors, HUL and ITC. And Mangalam basically floats the idea whether HUL could be up for a bit of a catch-up after ITC's very strong performance. Mangalam, over to you.
We've been talking about ITC's superlative performance or outperformance over its peers over the last 18 months or so, a move that took not only the stock but the entire FMCG index to a record high as well. But the big question is, now is it time for HUL? And the reason why I asked this is because if you just take a look at it, the outperformance of ITC in 2023 so far, the stock has rallied 33% versus HUL, the next biggest FMCG peer, which has rallied about 6%. Zoom out a little bit, you see in the last 12 months, this outperformance has been even more stark, with ITC moving 61%, whereas HUL has moved only 18%. But you zoom out the timeline a little more, over the last 5 years, you notice that both these stocks have given similar returns. So what this implies is that there have been periods of outperformance by one of these stocks at a particular point in time. So that's the big question. Is it time for HUL? And the genesis of this began in the last 1 month's move itself, where I saw HUL outperforming ITC. HUL is up 10% as against ITC by 3.5%. Now it's all about valuations. And here's where this plate is extremely important. Why do I say that? Well, because if you look at it, after this record rally, ITC is trading at 1 year forward valuations of 25 times, which is a 25% premium to its own historic valuation. And remember, the rally on ITC began from a time where it was trading at a 30% discount to its own valuation of 19.9 times. HUL, on the other hand, is trading at an 8% discount to its own historical average. At peak, this stock actually traded at over 25% premium to its current average of 54.3 times. Now, ITC has always traded at a discount to HUL, as you can see from here, but that discount itself currently has narrowed to 53%. From the time ITC's rally began, the discount was a stark 77%, and at an average, the discount has been 63% itself. So the question is, going forward, ITC, which goes into a period of high growth performance in the base, whereas HUL, which has a few triggers going for it, will we see some outperformance there? Let's note down the triggers for HUL. Rohit Java takes over as CEO from June 27th. Lower inflation environment means margin expansion for all of them, and gradual recovery in rural markets because of normal rain prediction, and also this being an election year, and finally scaling up of their acquisitions of VWash, Oziva, the digital foray. So the question again, will HUL catch up? Is it time for HUL?
Very interesting there. Mangalam, thank you very much for that. But we need to get into a very short break, coming close to the end of today's trading action. We'll come back with the market close and continue our chat.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM, let's create.
A road trip in a CNG car.
Where will all the luggage go?
OMG! It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
अभी और कितने चक्कर लगाने पड़ेंगे सर जी?
आप इतनी सी बात क्यों नहीं समझते सर जी? आप हमारा ध्यान रखो, हम आपका ध्यान रखेंगे। 9501-200-200 ये तो
एंटी करप्शन एक्शन लाइन।
मैडम जी आप बेकार में परेशान हो रहे हो। मैं कराता हूँ ना 2 दिन में आपका काम। आप तो बस चढ़ावा चढ़ा देना, घर बैठे आ जाएगा आपका लाइसेंस। आपको ड्राइविंग टेस्ट की भी जरूरत नहीं पड़ेगी।
पक्का?
पक्का जी पक्का।
तो आपने एक नंबर लिखिए, जब बन जाएगा तो उस पे कॉल करिएगा।
9501-200-200
एंटी करप्शन एक्शन लाइन।
अगर आपसे भी कोई रिश्वत मांगे तो कॉल करें 9501-200-200। एंटी करप्शन एक्शन लाइन से पिछले 1 साल में अब तक 300 से ज्यादा भ्रष्टाचारी गिरफ्तार हो चुके हैं। पंजाब में रिश्वत लेने वालों की अब खैर नहीं।
पंजाब के लोगों को ये संदेश देना चाहता हूँ, पंजाब को भ्रष्टाचार मुक्त बनाना हमारा वादा ही नहीं, गारंटी है।
नई कार। तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको नहीं तो
कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने। नहीं मूर्ति, कोई जरूरत नहीं है।
नई कार खरीदने से पहले ACO चेक करें और 36,000 तक बचाएं।
Welcome back. That bit of a rally on the Nifty, which took it past that 18,550 mark, has been sold into a little, taking it back towards the fulcrum level of 18,500, just about 25 points away from that. But at the same time, the pharmaceutical index has moved to the high point of trade, so that's something we will monitor. We have Sudeep Bandopadhyay joining us now. Sudeep, good afternoon. Before going into break, I'd walked across the big wall talking about whether it's time for HUL versus ITC now. We've seen a big outperformance from ITC. Do you think now, with the triggers with HUL ahead, is it time for people to shift?
Mangalam, I have a strong view on both, and I think the time horizons are different. Just that, as far as HUL is concerned, I agree with your logic and argument that after a lot of outperformance by ITC, probably now is a time for HUL to do well, and I think I completely agree with that. And the primary reason for that is that the belief that rural market is reviving. Rural incomes are coming back, and I think, God willing, if the monsoon is good, I think rural India will have a great time for at least next 12 to 18 months. Yes, election is also around the corner, so the government will ensure that rural economy remains buoyant, and this should help companies which are having a significant rural presence. HUL being the number one. I think the other FMCG company which should benefit is Dabur. That's my belief. But if you look at a long term, and I believe that somewhere ITC has a potential to significantly outperform others, primarily on the back of the fact that some corporate action in ITC in the long run or in the medium run is inevitable. And as and when that happens, sum of parts valuation will be significantly higher than what we see today.
Okay, got that. Sudeep, hi, good afternoon. Since we are talking consumer and it's the weekend round the corner, let me stick to some consumer stocks. You look at Zomato, it's been quite interesting, right? These are companies which were only talking about GMV and all these new parameters, but the market has taught them to look at profitability very closely. Would you be interested in some of these new themes? Maybe Zomato, Nykaa, beyond consumer, I mean, even PB Fintech came out with very good numbers. Paytm has reported improved profitability parameters as well this quarter.
Well, I think I divide this entire universe into two categories, Survi. And there are businesses which are grounded and which are just a different way of delivering a service which is well established. Look at delivery. Logistics is a 1,000-year-old business. Delivery is just trying to digitize, modernize system, introduce newer systems and do it better. So eventually delivery will deliver results and start rewarding the shareholders. That's my firm belief. I think I have a similar view for Nykaa. I think women's fashion and fashion worldwide is a huge business. We all know about LMVH these are big businesses, great opportunities. They are trying to get their act right. And I think once they have it right, they will deliver results for the shareholders. Now, whether the timing is now or we should wait, my view is we should wait. Let things mature a bit more. Let them stabilize their businesses a bit more, then we can enter. As far as Zomato, Paytm, PB Fintech is concerned, these are new business models. I think the unit economics, the specific model or specific vertical which will enable them to make money, reward shareholders, I think they're still trying to figure that out. Yes, they have all realized the fact that in a listed space, only profitability and future profitability is what matters. And that's what they're all focusing on, as opposed to, the GMVs and other esoteric and exotic terms. That's a very good development, but I'll still wait before I start looking into these newer age companies.
All right, Sudeep, we'll leave it there. Good speaking with you. Thank you very much for your time. Quick conversation today. Well, just 1 minute to go for close. It's not too much of a change. 36 points after all of that up and down all through the course of the day. Initial 1 hour 100-point sell-off, then a slow 90-point up move all the way till about 2 p.m. And from there, about a 60-odd point sell-off once again, which basically takes us back to about 18,520. I think the Nifty Bank will end about 0.25% higher as well, which is about 90 points in aggregate. And as I said, for the week, the Nifty and the Bank Nifty, not very much. Nifty absolutely flat. But the star has been the small cap index, which ends Friday to Friday with a 3% gain. Rima.
The other star has been real estate. The Nifty Realty Index is up 3.8%. Autos have done well post the monthly sales numbers. The Nifty Auto Index has seen a gain of 1.8%. And even today, you had strength in names like a Hero MotoCorp, a Maruti Suzuki. M&M moved up close to about 1.7%. And Pharma, that's been the big winner. Apollo Hospitals is the top Nifty gainer this week with a rally of 7.5%.
Well, we've had some pretty big moves in the mid-cap market. The mid-cap index is ending with a gain of about 0.4%, very strong advance decline ratio. And it's a long list of winners. Graphite India and HEG, these graphite electrode stocks, 12% up on Graphite India, HEG also keeping it good company. Then we've got names like Nykaa, the stock that we were just discussing, 7% up over there. Zomato up about 4%. Titagarh Wagons, 6%. I could go on and on. A couple of the contracting companies as well. Ashoka Buildcon, 4.5%. NCC, about 4%. It's a good day for quite a few of these names. By the way, DLF hit a fresh 52-week high today. 2.5% up on that stock. Extremely strong commentary coming in from the management. So these are some of the movers and shakers beyond the index. Let's not forget Cyient, the runaway IT stock, which has really been the rocket stock, so to speak, when you're talking about mid-cap IT, 80% this year. 6% today itself. Some big moves. Thyrocare had a decent session, 6% on the upside. It's a very, very lively looking mid-cap screen as we're winding down the week. The mid-cap index itself for the week, by the way, the Nifty, if you look at the week's tally, has managed, well, hardly any gain. Nifty is absolutely flat. But you look at the mid-cap index for the week, we are talking about gains of, well, 1.6%. So really, it is the broader market and specific individual stocks where all the action is. On that note, we will take a very quick break. We'll come back on the other side and get you our exclusive conversation with DIPAM Secretary Tuhinkant Pandey on Coal India OFS and other divestment plans.